TGIF Warriors. Hiya, Brock. How are you? Hope everyone had a good week. We have a 3-day weekend. We will not be broadcasting on Monday, Memorial Day. So, traders, history rhymes. Hello, Glenn. In 1917, we opened up after the first wave of the pandemic after Armistice Day in April. And we all know what happened that fall. Here in 2020 with COVID, reopening Memorial Day. So history doesn't repeat in May. So a month difference, probably the same mistake. And also interesting that it was really the celebration of our military in different ways. Armistice was about the victory and peace of World War I, and Memorial Day is our day to pay respect to our fallen through every war. So I hope everyone has a good Memorial Day weekend. Still believe in, playing it safe. Don't get crazy out there, and take care of yourself, because if you don't, you're going to affect your whole family. Okay, so um, yesterday when we were here during investing.com Thursday, Dixie was trading down around here. And I said, I don't want to press the dollar long side, but I'd be interested. I thought we could rally back to 99.80 or par. And that's what exactly happened. Don't try and make your week on Friday. And I rarely, unless, like there's an NFP with some volatility to scalp off of and trade and maybe put on a position, rarely enter new positions on Fridays. They're more like for book squaring and preparation for the week ahead. I've seen people make the mistake where they're not having a good week and then they start pressing on Friday because they have some monetary goal they have to meet or want to meet every week. And not the best idea, because Friday is, I'm not the only one that thinks about book squaring and pairing positions, and it's not exactly, it's more of something finishing. We're finishing the week. And talking about finishing the week, the S&Ps thought we had it, and it's a beach ball again. It's reverted back to the beach ball, because 2935 was the weekly off number, and we got all the way down to almost 2900, 2908, and here we are threatening here. I look at this, I was surprised on this candle and this candle. We never took out this high. So, people are going to be calling this some kind of breakout when we get above it, triple top, flat top breakout. So maybe that's what's going to happen, is that we get a breakout over this level and push. Anyway, scalping it from the short side worked, but I'm not getting a weekly unless we have it's early in the day. For a 2-week reversal, you need closes under 2935. And next week, the off number drops all the way down to 2852. So to me, it looks like they want to clean out the stops over the triple top. Maybe something happens next week after they do that. Also, in talking about the dollar yesterday, I said take a picture if you haven't seen a 3 drive before. There it was, failed from the 110 resistance area here. Does this turn me bearish the dollar? No. We're testing this 109 breakout. I don't know why we can't trade 61.8 back. We're about halfway back here, but sometime next week I'll be probing the long side of euro, short side of Dixie, thinking that next time we get through 110, 112, it's in the cards. Should we be able to take out this 110 level, and look at what stopped it. we're all waiting for the 200-day to be tested in the S&Ps, and that probably happens, but it certainly turned out to be a point of rejection. And next time above it's going to look like a breakout to me. And you have, close to a 300 pip range between here and here. And I'm just thinking from here to here, it could give you 112, but this actually measures up towards, even 113. So looking ahead, yeah, okay. You're bearish now, FX trader? Okay. Did you see the 3 drive? So, if you're new here, if you're listening to me, I'm not fine now. I said that it was going to pull back. So this was the 3rd drive. Getting back to gold, gold fulfilled what I was looking for. And Steve and I talked about it when it was trading up here that we could, just tag the breakout and then go again. I would actually like to see it go again. This always bothered me that we peaked here, but there is something I know. I mean, it's less that I know whether or not we're going to make a new high or fail, but I do know this, that if we negate this breakout, there's a change in the gold. Okay, so we'll see if we have one more blast next week or the week after to challenge the highs, but back under 1714, I think that changes the tone and the picture, negating a breakout like that. So we'll see what happens next week. Flat gold now. What else was I going to talk about? I really think that's it. Looking at the yen, looks like we have a 1 and a 2, and we'll see what the yen does with the dollar rally next week. Maybe we're going to put in a 3 driver here. Probably shows up better on a 4. Yeah, 1, 2. Didn't confirm here. The yen still looks good. So I think that's about a wrap on things that I was really focused on. Um, yeah. Oh, there's one other feature. Maybe for the first time, oil might be close to some type of reactionary high. We're starting to diverge, although the RSI over 70 is a little bit too much. Okay, I'll take a look at CAD. It's the same picture it's been for I don't know how long, but we're in this big descending triangle. Blake showed possible bottom here on the chart of the day. Blake, if the public, the FinTwit people, every day is something to chew on with the chart of the day. It's something that you guys should pay attention to every day. So, what are we going to do? We're going to break out to the upside with this bounce in the dollar. Is this just a sympathy bounce in the dollar before we have a continuation trade lower in the dollar? So, if crude really is putting in a big top, I guess you could look for a breakout. And if it's going to continue to the upside, a breakout under 138 and a half, a breakdown is going to look pretty ugly. So that's oil and that's CAD and that's a dollar and that's euro and that's gold. And, just one thing regarding gold. What I would like to see is gold make a new high. And the gold share that led it all the way up was Newmont. And that's come off too. I'd love to see gold make a new high without the gold shares. That would be a message to me. And for you crypto guys, uh, I guess if Bitcoin holds 8,000, it's okay. Really knocking on the door of this 10,000 breakout. So they stopped it here. They're trying to stop it here. I think as long as they hold 8,000, still looks okay. And when you have someone like Stelios, who's not an advocate of Bitcoin, looking at his charts from a macro view being positive, that is a message in itself. TBT, Scott, it's been testing my patience, but I'm still holding it. So we'll see. Here it is. Looks a lot like the 10-year yields. We're testing the 50-day. If we could get through it, and if the S&Ps are going to blow again, you would think that we'd have one more push left there. And with that being said, I'm going to turn it over to Blake and see what he's thinking to wrap up the week here. Hope you had a decent week, partner. And I know that you're looking forward to a 3-day holiday. And, I salute you this weekend for your service to our country. You may not like the politics of any engagement, but you always have to be for the troops. So happy Memorial Day, Blake. Glad you made it back.
Hey, Coach, how's it going? I'm sorry, I was just
Good.
listening to some of the
someone that
conversations
was
going on in my
someone that
office.
wasn't
What?
a
I'm sorry,
blithering
what'd you
idiot.
say? Huh?
I just salute you for your service. I know it's Memorial Day where we honor those that didn't make it back. I said I'm glad you made it back.
Oh,
Forex Analytics wouldn't have happened.
thank you. Yeah, Memorial Day. It's yeah, exactly. It's one of those holidays that I like to take a step back and recognize the people that didn't make it home and gave their ultimate sacrifice. But we will be celebrating that this weekend. And if you are, obviously, if you're in the United States, enjoy the time off. If you are not, just realize that we will not be broadcasting on Monday. The market should be fairly slow too. I think, Coach, if I'm not mistaken, the bond markets close early today as well. So it should be a fairly slow session after we get past the next couple hours.
Okay. Well, that's one hell of a rectangle.
I'm sorry, what?
That's one hell of a rectangle on the euro here. So yeah, it turned it back and right back to the breakout. You don't put a lot of new stuff on position wise on Friday, Blake. Aren't you mainly kind of book squaring on scalping and not aggressive on Friday? I warned people not to try
usually
and make
yes.
Yeah.
Usually yes. And for example, I bought and sold the euro twice today. I bought it at now. If you use Forex Analytics, you read my analysis last night. The analysis last night was 21st. And we've been playing this all week. Just was this the dollar Canadian? No, this is the euro. As warned above, the 110 level offered key resistance if we close below the 109.50 level, and the risk of a move back to the 109 level may offer support. Now, this is last night. Knowing that the 108.90 level was the breakout point, 50% retracement. So these dips below 109, I've been buying. And so I've bought it once below 109. And I bought it just a little while ago at 109.04 and sold it, or 02 and sold it at 109.09 or something like that just a moment ago. So I'm just playing this, the bounces here. I'm not trying to establish a position. I do, as I've been telling you guys all, for the last week, I expect or two, or maybe even three. I expect the euro to eventually break higher, but when we're up at the 110 level, I'm not a buyer. Just like yesterday, it's like we were up here yesterday. I said, I'm not a buyer up here. I think it's going to come off, and it has. Now, today, it's Friday. It's before a big holiday. We are smack dab in the middle of the range. So, you have to think: do you really want to be a buyer or a seller at these levels? Where's your edge? Your risk reward was great yesterday when you're around the 110 level, if you're a seller, and when you get a dip down to a place that you want to be a buyer, it worked out great this morning because you knew on first attempt it's going to hold. Now, I don't know if the second or third attempt is going to actually hold the euro this time. And I think more of it has to do with risk appetite or risk aversion. So, and then we could possibly break through and, trade back towards 108. I think this is entirely possible. Not necessarily right at this moment, but I think over the next, couple of sessions, excuse me, especially if stocks come down. If you think about like what China's they removed their GDP guidance, which I think the market is pretty happy with that, because they didn't say, well, we're only going to do 2% GDP this year versus 6% last year. They just removed their guidance, and I think their stance is this, COVID-19 has really thrown off the, our ability to give any type of guidance for Chinese GDP. So I think the market would have been
we keep poking China in the eye, Blake. I mean, first the delisting of their stocks here in the U.S.
Well, we haven't yet, but it will happen. That will happen.
And then a big arms sale to Taiwan. The one China policy. So, it's like every other day. It's okay. Anyway, we keep poking them with a stick here.
Yeah, and one of the other issues right now is Hong Kong. What happens with Hong Kong, and what is the response from the U.S. and there's if you look at some of the equities that have exposure to Hong Kong, and let me see if I have the Hang Seng. I think I should. Here's the Hang Seng. You can see that we came off pretty aggressively, yesterday. And I think this is Hong Kong is one of the markets we really have to be very careful with. You can see we, kind of broke lower here. So, watch the Hang Seng market. I think it's gonna suggest that things may accelerate in China a little bit to the downside.
Looks like the FXI you showed yesterday, Blake. A lot like it.
Yeah. Let's see. Here's the FXI, and we really still have to break down here for FXI. But if you start to see these Chinese stocks, break down, I think that's going to be more of a risk off type of move that we need to pay very close attention to. All right, so let's talk about a few other currencies while we're here. So we were just discussing the euro. Like I said, it's kind of tricky at this point. We do have Canadian retail sales coming in, and I think the dollar Canadian, if you were in the chat room yesterday, we, between myself, Amanda, a lot of the other traders, we were playing this double bottom. I got pretty aggressively long the dollar Canadian yesterday off of the support. The comments in our chat room, if you guys recall, was there are significant buyers below 139. Every time we dip below 139, it prop right back up. And if you don't remember why it was at that moment, I'll show you. There's a 618 retracement right here of this move. 618 retracement. Every time we dip below it, we were just getting, just aggressive buying coming in. So I went long the dollar Canadian, expecting this double bottom to play out, which it did. I still think it has a lot of upside though. So if you take this double bottom, here's the neckline. This should take us right up to the top of this wedge, right? So the top of the wedge should be coming into play. We are stopped at the 618 right now. So I'm buying now on dips below 130, 140 to 139.80. Now we do have retail sales coming out shortly. So if the retail sales are stronger than expected, we might get that dollar Canadian slipping a little bit. Flip side is if it's weaker, we could just break out. We could just break out above the 618 right here. We can break out right above here, and we will test the 141 immediately after. So I think the dollar Canadian is worth paying very close attention to as we go into the retail sales, and it's been very technical and been very tradable. One of the other currency pairs that I think we need to pay pretty close attention to is the dollar Mexican peso. I actually lost some money trying to buy this yesterday. It was just on like a nonstop bludgeoning. In matter of fact, I think I got out not at the lows, but I got out like right around the 22.85. I think I bought it like 22.93 or something like that. Anyway, I just, I'm like, oh, I don't want to deal with it. It looked like it was going to break down, and it did slice through that support. But overall, we're holding a confluence of the 161% extension right here, and this is a long-term 24% retracement. But I've been in the camp for a while, thinking that a break of this triangle is going to take us down to this 22 level. We may still end up getting there. We may still end up getting there, but that has more to do with risk appetite. Excuse me, really quick, guys. I gotta take a drink of my coffee. Hold on. That has more to do with my risk appetite than anything, I think, at this stage. But it does look bearish. So if stocks make a run, if the S&P makes a run for the 3,000 level, then I think the U.S. dollar Mexican peso is going to be, a shoe-in for a move down to the 22.50, which, by the way, I am a buyer. Any dip to 22.50 or 22.20, I am a buyer. As you can see, that's the big breakout point here. So I'm hoping we make it down there. I don't know if it's going to make it down there, but I'm hoping it makes it down there. The flip side to that is, stocks start rolling over from here. We never make it to the 200-day moving average, and then the dollar Mexican peso is a good pickup on the long side. So just remember, we are holding support. And matter of fact, yesterday might have been a false breakdown. So I think a move above, this trend line here, which I'll just add an alert here, just so I can be notified. But move above like 22, 20, 23, 25 would be, I think, bullish near term. So let's see, anything else I wanted to cover? The Aussie. So the Aussie, we got to watch it this week, because especially by the end of the day today, because the Aussie has put in a false breakout this week. So let's let me give you a chart that's actually a little bit that I haven't drawn on. So let's go Aussie dollar. Let me pull up a different feed. Aussie US dollar. Let's do this feed, and let me put it on a weekly chart. So the Aussie, what you'll notice here, little false breakout. So especially if today we close lower, like let's say below 65 cents, that would be a pretty bearish event for the Aussie. False breakout above 66 cents, close below 65 cents would tell me next week there's a very high chance. Next week there's a very high chance of us breaking through this support that comes in at 64 cents basically. So that's something to pay attention to, especially if you're trading the Aussie, or if you're like me, I'm on the long side of the Euro Aussie right now. And I'm looking for, the Euro Aussie to head back above 170 to 170, to mid 170s. So, that's kind of what I'm keeping an eye on before I start, adding to my Euro Aussie, long exposure. So that's just something else that, like I said, I'm paying pretty close attention to. Gold is still stubbornly strong. I sit here and look at gold, and I'm like, man, if you're just going to pull back, just please pull back so we can buy it. But pullbacks have been very minimal, and it's just not pulling back. So anyway, I'm going to see if Steve is here. I don't know if Stelios is here yet today, but let me see if Steve's here. Good morning, Steve.
Good morning, mate. Stelios
How's it going?
is not here yet. Good. I'm good. How have you been?
It's Friday. Oh, it's Fridays. I'm tired. I don't know about you, but I'm beat.
Yeah, I feel you. But
Yeah.
at least there's an extended weekend, so an opportunity to charge up the batteries.
Yeah, exactly. It's not like we're going anywhere. So yeah, it just kind of a slow Friday. I'm you know you have to be very careful today, getting super aggressive in the markets. Whatever you see over the next hour or two, if you have a decent, you know, profitable trade, um, chances are that taking some profits is not a bad idea. If you find yourself upside down in a position, um, and not stopped out of a bad trade, the chances of a reversal later today is not very good, in my opinion, because what's going to happen is whatever the markets do over the next hour or two, they're probably going to move and then just sit there. So that's what I'm. This is probably not a day where you're going to see some explosive move in one direction, and then it's just going to keep going, or you're going to see a big nasty reversal on a day like today when it's ahead of a long holiday weekend and you already have traders that have are disappearing for the weekend, whether it's an Airbnb or just hanging it up and saying I'm just done with it. So just be really careful about your expectations for later today. So I just wanted to say that to everybody out there. So yeah, so what are you looking at today, Steve?
To be honest, nothing substantial has changed today. We spoke yesterday about the possibility of a reversal for the euro and the pound, since they were both testing key resistance areas and DXY was almost at support, and this has played out so far. I think it was to be expected, especially since we know that today would have like reduced liquidity and Monday is going to be off. So, the market didn't have the momentum required under circumstances to just break through. And as you said, I don't expect that we're going to see any fireworks today. And given what I just said about that, I also assume that we're not going to see any fireworks in the stock markets either. So I don't think it's a good day for somebody to be day trading. Probably not the best of ideas.
Yeah.
The good thing is that it's a good occasion since it's a slow Friday. We're going to have in about 10 minutes Gregor with us, to give us like a more medium term view of the market.
Oh, so he's coming in today?
Yeah. He's going to be here
great.
within the next 10 minutes. So I think it's a good occasion to have him since the market is not very active. We will be able to, to have all the time to go through whatever he's looking at. Yeah, that's it.
I'll sit with you through the Canadian data. And then I'm gonna jam over to the chat room. DJ said, thanks, Blake. Have a good long weekend. Shutting it down after this call. It's margarita time.
Indeed.
If it wasn't 5:28 a.m., I would be drinking a margarita too. But look, in Athens, it's 3:28. You should definitely be drinking your Virgin Mary, Bloody Mary.
Well, Blake, it wouldn't be illegal for you and I to have a Bloody Mary before breakfast.
No, not at all.
That sounds pretty good.
I actually have some Clamato juice in my fridge, and some hot sauce and some blue cheese stuffed olives and some celery to make a Bloody Mary and a lot of vodka. So hey, if you're
sounds like you're a fan. You're a fan.
We are.
Speaking of margaritas, Blake, next year that you're going to be here, we're going to go for margaritas at a very nice place in Glyfada called Amigos. It's a Mexican, from what you understand, but it has amazing margaritas.
It's called Amigos, and it's a Mexican place.
Yeah, weird, eh? Extremely weird.
It's so funny when I go. I remember being in Santorini. Oh, I'm sorry. The data's coming out here just in a second.
Yeah, let's see retail sales.
We can talk about that in a minute. Hold on. Let me just grab over one. It's coming. Here's retail sales.
Exactly
Basically,
as expected.
yeah, in line. Not going to be any. Yeah, not going to be a mover. Oh, I was just saying when I was in Santorini last, there was this Mexican food restaurant, and actually we went there. We went there specifically to see how their margaritas were. Because, obviously living in the Southwest near Mexico, and, half the population where I live are Hispanic. I have very high standards as far as margaritas.
Of course,
So,
it makes sense.
yeah.
No,
But I was actually impressed.
Yeah,
I was
Amigos has excellent margaritas. Trust me. So you're gonna enjoy it.
Yeah, I'm sure. Yeah, so maybe a Bloody Mary for Dale and I. I'll make you one, Dale. Come on over. I'll see you in 15 minutes. All right.
Okay, buddy.
All right. So
Taking my
anyway,
jet.
hey guys, just have a great long weekend. Remember, we won't be broadcasting on Monday, and but I'll probably pop in the chat room because that's just kind of what I do. I'll probably see you guys in there Monday after I wake up and just pop in to see how everybody in there is doing. So remember, if you're not a Forex Analytics subscriber, make sure you try it. It's only $1 for 10 days. And then when you do get it, make sure you download the mobile app. And then you'll also be using the premium product when you're doing the trial. So that means you can go into the chat room and come chat with us in there. So to get to the chat room, you have to click on this little link right here next to your face, your avatar. I'm already logged in, so it won't let me do it. But anyway, we'll see you in there. Steve, Coach, it's all yours.
Have a good weekend, Blake.
Have a good weekend, mate.
Thanks. You guys have a great one, and I'll see you guys all on Tuesday.
Okay,
buddy. Okay, mate. Bye-bye.
Hi, Steve.
Hey, Dale.
All right, so go ahead, try and find things to talk about.
One way or another, we always manage to, right?
Yeah, looking forward to Greg has seen some of his clowns.
Yeah, me too. It's nice having him at least once per week to, to go through stuff with him. Since he's going to be here with us like any moment, I think what I'm going to do is I'm going to go through the questions. So we have questions about, let me see, pound yen. Let's see. Keep in mind that the pound USD has been rejected, as we were warning, from the retest of the neckline and the 200 daily moving average. So, as long as we stay below there, it remains bearish. Same deal with the Euro USD. We said yesterday that, listen, the risk reward definitely favors short positions, and there we go. The DXY, found support. Not exactly at, but near this triangle's trend line support. So as you see, nothing has changed. In essence, everything remains in its recent ranges. And there is no exception, not much of an exception because we have a question about the Kiwi. Kiwi did push back towards the highs, but another rejection from the previous highs so far. Even if we move higher, as I was explaining yesterday, I wouldn't expect the Aussie and the Kiwi to have much more upside left in them. So, even if we see another high, I expect that this is going to be short-lived. In the case of Kiwi, since we have a question, I would assume that 62.60, where we find the 61.8% fib, or worst case scenario a little bit higher, that we have the 200 daily moving average, might be enough before we see a bigger pullback. There is a question about pound yen. Actually, a statement that it looks quite interesting. Yeah, I still view this move lower. It has mostly corrective characteristics, right? So, we've spent quite a lot of time depreciating in this very orderly manner. So I wouldn't be surprised if, as the euro yen did, the pound yen sooner rather than later finds some kind of a low here and pushes higher at least once more. Keep in mind, though, that in general the USD yen, which, as you look at it, we had one interesting day in the week. That was on Tuesday. And, the rest of the days, today included so far, the range is small and in essence confined to the range that we had on Tuesday. So USD yen, resumes this annoying trade. So it's all about when the pound is going to find some type of a low, because the yen for the time being isn't doing much. We had two people mentioning the USD CAD, and in all honesty, I have nothing else to add here. I mean, we've kept repeating the same thing. You can see this formation here. I mean, it's a textbook formation, right? The only question is if the triangle is this, or if the triangle is this. And the question, the question somebody might ask is, what is the difference? The difference is that the implications in one case is directly higher. In the other cases, one push lower, likely towards 136, where we have the 61.8% fib, and then higher from there. But in any case, I expect higher prices from the USD CAD. Whichever of the two scenarios ends up being the correct one. The only question is if it's going to happen from here or from a little bit lower. Obviously, the line in the sand, that separates the two scenarios is, as long as we keep holding above 138.50, my main scenario remains straight higher, right? How would we confirm something like that? With a break above this trend line resistance and the 50 daily moving average, both of them like below 141. Okay, in that case, I would look higher. Do we have Gregor?
Yes, I'm here.
There you go. I heard something. Okay. So, Gregor, welcome to the party.
Yeah, I'm here, always ready for party.
It's a slow day, so it's an excellent opportunity for you to have all the time in the world to give us your insight. What do you think? What has changed since the last time we spoke? Your Euro-Yen scenario did play out, so it's a good idea to also revisit that and tell me if you think that this corrective bounce is likely over, or it has more to go. But most importantly, I think that a lot of people are asking for clarity having to do with where do we reverse lower from, at least for a pullback in stocks.
Sure,
and when is the dollar going to break out? Because it's been very annoying with the dollar being confined in a tight range. What do you see happening from there?
Yeah, I will go step by step. I have charts ready. So let me start with the Euro-Yen. So as you mentioned last time when we spoke about the Euro-Yen, I highlighted this potential, at least temporary low in place, because we have seen a retest of this. Let me just go back.
Beautiful forecast on that, Gregor.
Hey, Dale, you're there.
How are you, buddy?
I'm fine, thank you. Yeah, it was quite an interesting development because everything, as I said before, everything came in play down there that actually pointed for at least 3 wave rise. So just to give you a quick recap here, it was a wave X retested, and on the lower time frame charts, you had 5 waves up. And these are those 5 waves up from that low, and obviously either it was a part of a bullish impulse or maybe just of a 3-wave corrective recovery. We have seen a very nice resumption higher with another 5-wave sequence. Now the question is where we go from here. Well, here is a little bit tricky, a little bit tough question. Because we have only 3 waves up, and you know that always when you have just 3 waves up, it can always be a correction. So I already draw
especially given the fact that it's been in a prolonged downtrend. I mean, the pair.
Yeah, exactly. This also must be considered, of course. So after this 3-wave rally, and especially after a completion of these 5 waves up, I draw this new trend line, okay, and potentially was looking for, just as an option, another option, that this ending diagonal is still unfolding. And if this recent high will stay in place, then clearly there could be another wave this wave X retested that I showed you earlier, and then we get another bounce. Actually, I really like this development so far, because if we'll have from a new low another 5 waves up, I think there will be another very similar opportunity like we had it 1 week back. And the reason why I'm looking for potentially, I'm open-minded regarding this case for another drop here, is also because current drop looks quite impulsive, quite strong.
We seem to be in wave 3 in the short-term chart there,
Yeah,
right?
Yes.
And
Exactly.
Graga, don't most ending diagonals have 3 hits of a wedge line, and there's only 2 on Euro Yen right now? And then if we get one more,
Yeah, if you consider this, if you consider like that, yes, then another retest should be seen. But if you
Okay.
consider like we have seen it
Yeah.
last week, I was looking for 1, 2, 3 with a throw over and then a reversal.
Okay.
So actually both formations are valid, but I really think that we should have this option also valid at the moment, as long this current swing high holds. If this one is broken, then I think we go much higher here on Euro Yen.
Got it.
Okay, so regarding stocks, okay, the first chart I want to look at is this put call ratio. Now notice that here on the bottom I have put call ratio, but it's inverted. So actually it means if you see
to be good, well correlated with the index.
Yes, exactly. Which means if you're at the higher extreme, it means there are a lot of calls. And if there are a lot of calls, market believes that price will go to the upside. And if there is extreme reading of these calls, obviously you should be aware that something opposite will happen. And we have here also moving average, which I applied to this total put call ratio. So you can see that the lower extreme here was reached in March, and then we have seen a very nice bounce from the lower side of these readings. And now we are at the upper side of these readings, meaning that we should be very careful. At the same time, we see S&P 500 at the 61.8% retracement, and also at this consolidation from March 09. At the same time, we have to consider that March 09 was actually, here's the S&P 500, March 09 was actually the gap where everything started regarding this massive breakdown. We are just here. This was your gap. Okay, so you're right here. You're feeling this gap, and we are turning maybe down from here. So I really think that we could potentially see, even if just temporary high here, we could see a deeper retracement. Another chart I want to look at is the 10-year US notes. Okay, now the wave count of the 10-year US notes, before I go to that, let me just show you this one.
I also sent you, since you're talking about that, I just sent you a picture if you want to show it on Skype.
Okay.
And I'll explain what it is. I've already shown valuations and how they've skyrocketed, especially Russell is at like all-time highs by a lot.
Okay,
this is also
okay. I will go to that. Just give me a second to finish this part. Okay.
Yeah, yeah.
So we have the 10-year US notes here consolidating. What is significant about the 10-year US notes when comparing to the S&P 500 is that they are staying in a range and not seeing a drop despite very nice bounce here on the S&P 500. Okay, so I'm thinking that sooner or later this consolidation will break to the upside. Maybe the trigger will be the negative US rates. I don't know, maybe just a speculation that this could happen and the yields will go lower, and you will see the 10-year US notes moving higher. So when this fifth wave will start, I think that there is a great chance that S&P 500 will hold this resistance and that we will see a pullback. Also, I made a very nice comparison here with the current developments on the 10-year US notes compared to the S&P 500 formation back in 2018-2019. Here was a drop, very strong one, and then a very strong recovery. I call it drop, pop, and then you have seen a consolidation in a triangle before this very nice strong move to the upside occurred. At the moment, if you look at the 10-year US notes, it's actually the very exact pattern unfolding. So I would not be surprised to see actually this market breaking higher, especially if we consider that the S&P 500 is having 5 waves up and you are with a 5th wave moving into this gap March 09 resistance. At the same time, we have to consider the fact that we have on the S&P 500 versus 10-year US notes, okay, we have 5 waves up. Here's waves 1, 2, 3, 4, and you are in a 5th wave. So what it means? It means that yes, stocks are at the moment stronger than the 10-year US notes, but what would you expect? You would expect a correction. And when this correction unfolds, it means that you could see the 10-year US notes stronger. So I think, again, that this could be a very nice indication that we could be facing a resistance and a pullback on this ratio, meaning that the 10-year US notes could actually move to the upside and could break out of this triangle. Okay. Another thing that I think that should be respected is the very strong technology sector. The Nasdaq,
it's insane.
Yes, it's a very strong one, but it has potentially much bearish pattern unfolding.
I know. Actually, I was showing this exact.
To the S&P.
I had drawn this exact wedge, and I showed it the day that we actually touched resistance for the last time. And I'm 100% with you. I mean, even from a basic technical analysis perspective, this looks like an ascending wedge there. I mean,
yes. So you can imagine.
Yeah, and we fill the gap also, right?
Yes, and you can, of course, this gap, and you can imagine if this market, the strong market, is showing you potential top formation. Even if you just see consolidation here, the others very weak markets like bank stocks could easily hit a new low. Keep in mind that bank stocks, for example, are trading at these levels here, very close to March low, actually.
Yeah, and they need higher yields, right, Grega? So lower yields are going to be negative for banks.
Banks are doomed. We've had this conversation before. Banks are doomed. Either if they get higher yields, the companies and entities they have given loans to will start defaulting, because the vast majority of them have very weak balance sheets. So
let's buy a bank.
Yeah, so they're doomed. And if yields remain as low and the yield curve as flat, they can't make any money. So it's it's just choosing if you want to die by the knife or the pistol. You know what I mean? That's the choice they have.
I'd go with pistol.
Yeah, so probably yes.
Here's this bank stocks ETF. You can see that we are consolidating here.
Yeah.
Okay, we barely retraced 38.2% of this coronavirus decline, while here Nasdaq is much higher. So if this market is going to see a pullback out of this wedge, when wedge is broken, of course, that's when we can look for pullback to really be in play. For now, it's just a poor speculation that there will be a pullback until you see a breakdown. So when this wedge, if this wedge is going to be broken, I really think that bank stocks could again retest those lows very easily, actually. Another market that I want to show you is our commodities. Okay, now here I have Thomson Reuters commodity index, and what I see here is that you have 5 waves up from the lows. Okay, so if this market is going higher, if these are 5 waves up, it means that maybe this market will do much better compared to the stocks, and maybe stocks will see deeper pullback. We will see, but the whole story, that S&P or stocks commodities ratio is at extreme lows, and maybe this will be just an early start of some bigger recovery. We will see how this unfolds, but I really think that some of the commodities are very, very interesting. Another market that I want to highlight is definitely crude oil. Crude oil made 5 waves up, and it came with this July contract back to this 4th wave resistance area. So maybe we'll now step into this corrective phase. Keep in mind that crude oil has been very strong lately, and if this, again, strong market will turn into a pullback, especially crude oil, I think it's very closely tracked for risk on, risk off moves,
Yeah.
especially after those negative prices a month back. So if this market will step into a correction or maybe see a 10% of decline, which could easily happen at this with these prices, with this volatility, then clearly there will be some speculations that this will lead to a risk-off sentiment overall, and the stocks could definitely be impacted by potential pullback. But what I'm looking at is that this will be just a temporary pullback. I still think that this is a wave B, maybe even wave 2, but later I think there could be opportunity. If we go back towards $25 per barrel, I think there could be opportunity to look for more gains back to this March gap, when actually crude oil was the first one indicating for a massive breakdown that occurred later on stocks as well.
Okay.
Nice.
Now I have several questions for you here, but let's begin with we've seen a huge pullback from the unprecedented highs in the gold silver ratio, and that happened mostly because silver accelerated higher.
Exactly, yes. And will
What do you think we're
outperform.
doing here in silver?
I think that silver could actually be bottoming. I already received a lot of questions from members. How can I'm looking for resistance on gold and expecting maybe silver to bottoming? But I answered, well, what if I would tell you back in 2014 that silver will be trading around 16 or will hit $11?
11, yeah.
While gold will rise towards 800. Probably they will all say that I'm nuts and that silver will be trading around 40 if that would be the case. But it's not.
Yeah.
So,
Indeed.
I mean, I'm definitely trusting more the structure itself rather than just trying to be right because something happened in the past or that something should unfold like we think it should unfold. But markets, as you can see, can surprise.
So bottom
always.
line, you think there is a high probability we've already seen the low, right?
Yes, there is.
Yeah, because
And,
it looks to me
also,
like that as well.
I think that, gold can just stay in or make $200 of retracement or stay in a $200 range, while silver could just slowly still progressing towards $25 or so. And gold will not be the
$26
same.
is huge resistance.
Yes, and this may actually very easily be the case, especially if you look at the gold-silver ratio, as you mentioned. We are at the extreme levels, meaning that if we really fall from there, then those markets, or I should say, then silver could very quickly catch the upside that gold made in the recent months.
Okay, so what about gold then? How shorter term picture? Do you see a pullback from current levels?
Yes, short-term picture, it's a little bit tricky here. I don't know if maybe this market is making some kind of a wedge here, or are we still making a flat here for a wave 4? But I would not be surprised to see a consolidation, this one, just resuming, but with possible lower supports to be retested here around this area. And I think this will be very decisive for gold going forward. If we go and see a very strong push below that level, then I think more weakness is coming. If we get a bounce, then still either we stay in consolidation or even rise towards 1800.
Okay.
Wouldn't that make sense, Greg, with yields falling and a correction in the S&Ps, that this was a temporary high and we have one more high coming in gold before the correction?
Yeah, sure, of course. Very possible.
Is that your other 5 that you have up there?
Yeah.
Okay.
Yes, I really think that that's very possible. We will see whatever happens when silver will turn into a correction, because sooner or later I think we will get there 3 waves drop as well.
Okay, thank you, buddy.
Thank you.
I know, I remember, I don't know if it still stands, that you were looking for at least one more higher high, but I'm going to ask this question again. Don't you think there is a very decent chance that we've already seen a blow off top in pairs like USD NOK, USD SEK, and there is no
Yes.
more upside.
Yes, I think that there is a big chance for that, especially because what I see is that those markets actually made a very, very
The
interesting
reason I
move.
believe that is not only the price action while we topped out, but it's also the fact that they started being stronger before crude even started getting
Yes,
stronger. You know what I mean?
I was just planning. I was just want to mention the crude oil. Yes, those markets moved extremely sharply to the upside when crude oil was actually declining, but then it bottomed even topped even earlier before crude oil bottomed. Yes, so if crude oil is now going back towards this March 09 area, then I think that definitely those markets could face much lower prices. But itself, like just looking at the wave structure, like on dollar Mexican peso, it's still, let me just look, it's not looking impulsive from the highs. That is what is worrying me. Here you have it. Okay, let me just move this. You know, it's still, I know we got a breakdown, but it's a little bit not so looking so impulsive. So we'll see what happens. Maybe this will be more related overall dollar story.
Speaking of the dollar, now that's the $1 million question. What's happening there? I mean, we've been consolidating in a tight range for quite some time now. It's been a very annoying and tough trade. So you still believe there is one more move down from what I see there, right? So you think we're finishing up with this triangle and then pulling back?
I mean, we have seen a very strong drop here, and since then we are just consolidating. We retraced for around 50%. We tested these levels for a few times, and it looks like that we are now reversing back to the upper side of the range, but it could be a wave E. So still, I would be careful here. Whenever we get 99 breakdown, then this could really kick and send prices for a wave C much lower.
Which would also mean, for example, that the Euro USD is going to break through 110 if we do see that move.
And I will look, in such case, I will look at cable. Cable is looking also corrective here from the highs. And if you pass this 1.3 level at the same time when dollar index could break this 99, then I really think that this could this pair could fly. Maybe euro dollar, as I said, will probably do the same, but I would not be so sure about the commodity currencies. You know,
Aussie and Kiwi, yeah.
Yes, I think that those could just stay in consolidation for a while.
Yeah, also, but not as long as the stock markets are under pressures. I mean, you're expecting a pullback, and I agree 100%. They should sell off along with the pullback in risk assets.
So what I want to say is that commodity currencies are more linked to commodities and stocks rather than looking at dollar index and trying to link them to those.
I agree 100%.
You know,
Any luck?
Know what
Steve,
go ahead.
Steve,
I've been listening to Greg for 3 years now. And, Greg, I've interviewed a lot of people that practice Elliott, but you know what you do that most don't? You tie in all the intermarket relationships, like, with your wave counts, and then you put together the jigsaw puzzle to just show the whole picture and how they all connect with your wave work. You do that better than anyone I've ever interviewed that's an Elliottician. Just want to let you know that.
Yeah, thank you very much. Yes, of course, markets are linked, but sometimes, it's much easier for me. It would be much easier for me to trade just the patterns, But like here, we have a very nice structure on cable, like 5 waves up. And then if you look at some other markets like Euro Pound or whatever, and then sometimes if markets do not agree, I will not be enough confident actually here to pull a trigger. And even later in the next 24 hours, you will still see price to the upside, and I will say myself, look, my gosh, I was so right with this wave count. Why I didn't trade it? It can be very positive. It can be sometimes in advantage.
Double-edged sword.
Yes, but sometimes if you know too much, it's not always the advantage in the markets because
Yeah.
it's just too many informations. But so far, I just fell so deeply into this, and I just love what I do,
Yeah.
and I'm looking the way I do in the markets, and maybe
Yeah.
that's the way
Well,
for me.
I'm a fan.
Thank you, Dave.
Dale, do we have an interview?
I'm going to interview you.
Okay, we don't. Good. That means that we can forward a couple more questions to Gregor.
Yeah,
then, since
sure.
Okay, perfect. So, in essence, he already covered USDMXN because you just showed it. There was a person asking for it. Pound Aussie. Yeah, that's a good idea actually. You know something you mentioned before, the Euro Pound. So why don't we have a look at some of the crosses like Euro Pound, Euro Aussie, Euro Kiwi, Pound Aussie, Pound Kiwi, and tell us what you think about them.
Pound Aussie. Well, we have definitely see a very strong drop here and a reversal when looking at the weekly chart, but we are currently at this lower trend line support. So
yeah.
I think that there could be a bounce, and maybe this could occur at the same time when cable could potentially move higher when I show that wave.
And at the same time when risk is pulling back, because we know that these
Yes,
pairs
exactly.
are
And
inversely correlated to risk assets.
Yes, exactly. So here maybe we have actually fifth wave trying to bottom around the lower trend line support, and then you will see a rally. Of course, it's not very easy to trade, but overall, I would not be surprised if we see a retracement here. Also, keep in mind that we took these fourth wave supports out, and now not out, but just spike lower, and now we could potentially reversing higher here.
Okay, what about Euro Aussie, for example?
Euro Aussie, I think that this is a consolidation here, ongoing.
So one more push lower.
Yes, it could just stay sideways. Maybe you will get a more complex wave 4 here, like that. You will see sideways and then break down. But I think that any higher prices could limit
the important question here is, besides the shorter term price action, do you think that all of those have already topped?
Yes, I think that we are going much
as a big
lower.
Yeah, okay.
Yes.
So okay, got it.
I mean, it makes sense when I look at euro dollar daily chart. We are in a big triangle consolidation. Actually, we haven't seen much of the moves there for the last 12, not 12, for the last 2 years. And I think that there could be a breakdown while Aussie recovered with 5 waves, for example.
What about Euro Pound?
Euro Pound, I think it's now at a very interesting resistance. Now, if we go from a weekly level first, here was a 5 waves up, and now you're in consolidation. And this consolidation maybe could be even a triangle. Wait a minute.
Yeah, it's definitely very tricky to to map that out, right?
Yes, this is wave A. This was my wave B. Okay, yes, that makes sense. And now you are in a wave C to the downside. And this wave C, this part is the most important. This wave C, even if it's a triangle, should be made by 3 waves. Okay, you have wave A, you're now in a wave B, and you will notice that wave B just spiked into this very nice resistance.
So you think this is a great risk reward opportunity to be short here?
I think that this, I would say like that this reversal potential top here, and if we see a drop back towards or back below 89, then this would be some kind of confirmation that pound is waking up. Okay, and in such case, I would be more confident in cable longs, because I would see the overall. It's much easier to look for cable trade if you see the overall pound recovering against the others as well, not only against the US dollar. Because if it may easily happen that cable will move to the upside, okay, euro dollar at the same time, you will be trying to buy pound against the euro, but this pair will go sideways.
Okay.
So I think that cable, it has a much better potential.
Got it. We have a question about the pound kiwi, a long-term view of it actually, like a weekly chart on pound kiwi and where do you think we stand? And then natural gas.
Long-term charts, I think that pound kiwi is remaining here, this downtrend. We have tested this upper side of the channel. We are reversing quite significantly here on a weekly level. In fact, from that drop here, you can clearly count 5 waves up, while current recovery cannot be counted in 5 waves up because you have too much of overlapping activity in this corrective channel. We also stopped with this recent spike at this higher parallel trend line, and we reversed from it quite nicely. So I think that there is a risk that after any short-term maybe bounce, this market
We're going to be headed a lot lower.
Resuming to the downside, yes.
Okay, what about natural gas?
Natural gas. Let me just find the charts.
And gas on trading view if you want to look at it there.
Are you going to that Mexican restaurant? That's why you're interested in natural gas, Steve.
I'm not sure if you know that. Did natural gas ever traded negatively in the past, like crude oil?
No.
No, I don't think so.
No, it hasn't done it.
I'm pretty sure.
Crude's the only contract I've ever seen go negative. That's the only time I've ever seen anything ever go.
Yeah, because I have
negative.
in mind like somewhere, I'm not
Negative.
sure, maybe somewhere in the US, the natural gas traded, maybe in some part of locations, I don't know. Not the contract, but somewhere I noticed this. I will try to find the article. I mean, I'm just wondering if natural gas can do the same like crude oil, because everyone will try to buy natural gas like it's cheap, and then you will see trading negatively. What then?
Well, that's a new dynamic.
Yeah, exactly. Okay, so here's a long-term chart of natural gas.
Mm-hmm.
And I think that it could be very interesting here at this lower trend line of this wedge. Ideally, that's an ABC formation. And if that's the case, then you know that the reversal is not far away. But still, on a lower degree, this is not looking like a bottoming yet. So maybe we have to wait a little bit more. That's why I asked if there is a chance that even this one will trade negatively.
I doubt it.
Someone said no, it's cash settled, so it can't.
Okay. But I'll look for that article. I think I found it somewhere.
Gregorio.
So lower time frames, you'll see that there is a lot of divergence, RSI divergence as well in the recent price action of natural gas. So
it's probably a buy in the summer when lowest demand is June, July. We're probably getting close, don't you think? Yeah.
Yeah, I mean that. I still think that there is a longer term opportunity that there could be for natural gas to turn higher, but it's the same story like with crude oil. You probably will. I would maybe rather look at some of the maybe
shares,
some of the companies. Yes.
Yeah.
Okay.
That are dealing with natural gas. Same thing with crude oil.
Okay. Let's finish up with two exotics. One is USD-TRY, and I'm going to add to the question, do you think there is any chance that it has finally, after many, many years of being battered, the TRY, I mean, it might have peaked? I'm assuming that's what's in the mind of the person that's asking. And the other one is USD-INR.
Okay. Let me just.
And then the Zlotny and the shekel.
I'm just looking for one chart for this that I have. Okay. Okay. Here it is. You have here stock index, okay, of Turkey, and then you have dollar against Turkish lira. And what I see here is that actually you have a very nice negative correlation, and there is a chance that this index completed ABC corrective decline, a flat formation. You also have a very nice recovery. And at the same time, what you see here, it's a fifth wave moving out of this triangle. Okay, so meaning that there can be potential top formation coming on this pair.
Yeah.
Of course,
One more
they will not be
push.
tick by tick. Sometimes the one market will make 1-2 week, maybe even 1 month earlier reversal than the other one. But I think that overall we have to respect the personality and the correlation they have. This is a very strong bounce, and I think that there is a chance that we will see more upside here after retracement. And at the same time, with an Elliott wave principle, we know whenever you see a move out of a triangle, there is a final move coming as part of a higher degree uptrend. So you are in a fifth wave. Of course, there can be pushed towards 7.5, even higher before we topping. But from a time perspective, maybe we will be much lower trading already next year or by the end of this year.
Okay, and use the INR.
Do I have this one? I think.
Just pull it up on TradingView.
How many instruments do you cover, Grega? Just ballpark.
I'm going through a lot of them.
50
during weekend.
Yeah.
I mean, I have a lot of tabs and TradingView, like global markets, commodities.
Yeah.
Then a lot of indexes.
Yeah.
And then I'm just.
It's a lot of work.
Yeah, I mean.
A lot of time. Yeah, the point being is that, you know, all this work and all this time that Grega puts in, for those of you that are, you know, smart enough to still be here and listen to his analysis, is that you could have it at your fingertips by becoming a member. And I know that it's helped me the last 3 years, having Grega's views. Just click, you know, what he's looking at on Euro. Or I remember I used to say, you know, when I interviewed you on FX Street, I wonder what Grega's thinking here, or I wonder what Blake is doing in here. And now, you know, I know, and you can too, for a few bucks.
So use the INR. Is it the triangle?
Where? On which level?
I got a discount. Steve gave me a discount on my subscription.
Currently, we're consolidating.
Yeah, I mean, in which time frame?
I'm looking at the daily, for example.
Daily, let me just.
DJ, you're stir crazy, man. You need to go out to a bar.
You're looking like this?
Wait a second. What are you looking there? USD
INR.
over INR USD.
Wait. Okay.
Okay. Yeah.
So we are. Okay. What I see what you mean. Yes. Let me just look.
It looks to me like it wants to move lower since you're looking at the INR USD and not the USD INR.
I see some kind of a wedge here.
Yeah. This is Elliott wave on the fly right here.
I would be very careful down here.
Yeah. Ending diagonal.
I agree with you. I also think that it's going to bottom out quite soon. But don't you think there is one more push left to the downside if you zoom in before we do that?
I think all the exotics kind of look like that. I went through them
I
last
agree.
night, Steve.
I agree, Dale. That's my point. I
One
also
more
believe
push.
That, yeah, I also believe that the exotics actually might be very near finding a bottom.
Okay, let me just look at this substructure here.
Singapore dollar looks good. Not making new lows against the dollar. There are a lot of candidates, Steve, and haven't been able to talk about that kind of trade for a long time. The exotics appreciating against the dollar. It's going to be an interesting era.
So you agree from what I see, Greg? One more push to the downside before high, right?
Yes, it makes sense. Yes.
Yeah.
Okay, cool.
Great presentation, bro.
Thank you, bro.
Let me show you what I have to deal with.
What's he doing? Playing beauty shop?
He has his Batman on my head.
At least he's very quiet.
It looks just natural.
Yeah,
what you have to deal with it. You're lucky.
It's very funny. It's very funny that he's so quiet. Like he's
he is, because he knows he knows that I'm speaking. So he decided to come abuse me while remaining quiet.
Great way to end it.
Okay. Do we have any more questions?
I think that's it.
That's it.
I think we covered more or less solo. Okay, we have one, but warning everybody, that's the last one. FTSE 100. And that's for sure the last one. Definitely a lot weaker than the US indices.
Yeah.
And what I have been saying, because they've been asking me about the FTSE, is that I think it looks very bearish. I mean, this rebound looks very corrective to me, and I expect it to move lower. I don't know what you think about it.
I'm just wondering if Nasdaq 100, if US stocks, which are very strong, will come lower, then maybe this one will be trading close to maybe 78.6%. It could make deeper retracement. I'm not sure if I can count 5 waves up here, really.
I think there is a chance that in indexes like the FTSE might actually even produce a lower low. That's what I think, Greg.
Yes. I mean, similar like bank stocks, right?
Yeah, exactly. As you should, exactly. Looks a lot maybe like the banks.
The idea could be the following. I mean, if we're looking to buy, but I'm not sure if I would personally looking to buy at these current levels because we are moving into some stronger resistance. Then maybe in a risk off, you would look for potential opportunities on the short side on this weak market. If you're trying to buy, whenever we get a pullback, you put this market on the side and you look at the US stocks, or maybe even better at some of the stocks in technology sectors after pullbacks.
Buy the strength, sell the weakness.
Yeah.
Always the way to go. Okay, thank you very much, Greg. As always, we really appreciate your input, at least on a weekly basis. It's amazing to have your viewpoint on the markets.
Lots of things to consider over the weekend.
Thank you for another great week, Coach. And, do what you do best.
So everyone, just remember, whatever you're trading, hope you all had a great week, but don't just count those pips, count your blessings, stay safe. We all hope, because you're part of our family, you remain untouched by this virus, and we're going to rock next week. So join us then. Have a great weekend. Steve, great job again this week. And
you do, Coach. You do, Greg.
And we'll see everyone on Monday. You're very welcome, everyone. Adios.
Bye-bye.
See you, Greg.
Bye-bye.